afternoon, ladies and gentlemen, and welcome to this week's first live trading session. Today, we're going to be looking at the euro against the Australian dollar, and we're not going to be looking at a current signal or signal which maybe took place 10 minutes ago or half an hour ago or even an hour ago, because that would be a past signal. We want to look at evaluating the market and seeing potentially what signals may be upcoming potentially throughout the day, over the next 24 hours, or at least this week. So something for all traders to evaluate and keep in mind. So we're looking at the euro against the Australian dollar. Now, if we're looking at the euro against the Australian dollar, if we're looking at most volume weighted average prices, most oscillators, most momentum based indicators, there's going to be a lot of bias towards upward price movement. However, there's a few things we definitely need to keep an eye on, and a few things that we need to note, because if we look at the Eurozone's two largest economies, if we look at France and Germany, both are seeing political crises. For example, if we're looking at France, yes, we have a new prime minister, but we're looking at definitely a very shaky political scene there. If we're looking at Germany, Germany is also about to see a vote of no confidence in regards to the current chancellor. So a lot of political instability at the moment is not triggering a collapse, or should we say very low confidence towards the euro, but we definitely need to keep in mind that that is something that could pressure the euro in the short to medium or even potentially longer term. Now, in addition to this, we're looking at upward price movement in regards to the euro, because we've had some positive data from purchasing managers indexes. For example, the PMI for German services was higher than expected. It was almost close to actually the expansionary zone. If we're looking at French PMI indexes for services, again, there is indications there that there's an improvement, but still they're currently in the negative zone. They're currently still below that 50 level, which is extremely important. We also need to take into consideration, if we're looking at the ECB, they've cut already by 1.35%. Most analysts believe that in 2025, they will cut a further 100 basis points. And even the ones which are less dovish in regards to their view of the ECB, they still believe that they're going to cut to 2.5%. So that is quite a significant cut. If we're looking at Australia, though, we're looking at positive economic data. Last week on Friday, we had very strong employment data for Australia. And if we're looking at the Reserve Bank of Australia, they have not cut at all in 2024. And a lot of analysts believe that even in the first quarter of 2025, the Reserve Bank of Australia will still not cut. They'll keep on pausing while they're still seeing positive employment data and also quite a sticky level of inflation. But if we're looking at this week, we're not going to have any further significant economic releases and, generally speaking, news for either the Eurozone or Australia. So we can concentrate mainly on technical analysis. Like I said so far, there is a lot of reasons why potentially the euro could decline. Like we said, a very dovish ECB, political instability in the two largest economies, and also potentially, like Moody's report this morning, that the Eurozone may see also debt and budget difficulties as they look to bolster the amount of budget which is going towards the army and defense departments. Whereas if we're looking at Australia, we're looking at a completely different scenario and quite a hawkish central bank. But if we look at technical analysis, like I said, we're looking at on the 2-hour time frame, the latest two candlesticks are bullish time frames. Are bullish candlesticks. We're looking at upward price movement at the moment. We're above the average price movements as well. So if we're looking at the 75 bar EMA, the 100 bar EMA as well, the price is very comfortably trading above. If we're looking at the oscillator, again, we're trading above. But we can see that there's a resistant level here. So for example, we have a resistant level here, we have a resistant level here, and we have also the slightly higher resistant level at this point here. Now, I've already done the honors of working out the average resistant level. If we work out the average resistant level, we're looking at this resistant level here. So we're very, very close to the level of resistance. Now, even if we go to a daily time frame, again, we're very close to the level of resistance. We can see a resistant level here, here, here. And generally speaking, if we're looking at 80% of the time, if we're looking at this period, we're going all the way back to April. 80% of the time, we're below this level. So the question is, are we trading above the intrinsic value of this exchange? And even if we're going to go onto a much smaller time frame, so here, for example, we have a 5-minute time frame, we can see very close to a level where we're consistently finding resistance, sort of point of collapse. Even if I go to a 15-minute time frame, you can definitely see that more clearly as well. So the question that we need to look to get answered and evaluate is, as the price slightly rises, or potentially even at the current point, is this an area where we're going to find resistance and we're going to see the price decrease in value? If we look at the Australian dollar today so far, during the Asian session, it was the second best performing currency. Now, of course, the Australian session now has ended and the Asian session has ended as well. But maybe as the next session enters tonight, are we going to see a very strong price movement with the Australian dollar again against the euro? So this is something we need to take into consideration. So if we go on to a smaller time frame, then there's certain levels of the market that we can look at. Now, we can either look at the price low of the day. This is the price low of the day. We can use that as a potential breakout point. Now, if it breaks below this level, then that's a signal that potentially the exchange rate may decline. This is a 15-minute time frame, just so everybody's aware. Also, keep in mind, if we're going to look at that level, by the time we decline to that level, then the 200 bar simple moving average is, of course, going to continue moving upwards. So that's probably also going to be the area where the price is going to decline below the 200 bar simple moving average, which is another indication as well. For example, the last time that we moved below the 200 bar simple moving average, where there was a clear crossover, was this crossover here. And we can see since then we did see quite a strong decline. So we're looking at another similar scenario. And also, if we're going to get a decline of that level, we definitely will cross over to the negative side of the MACD. Alternatively, if people don't want such a strong breakout and they want an earlier entry, they can look, a lot of the time, traders that they look at a 65% momentum level. So if we're looking at a 65% momentum level, it's at this level here. So basically 65% correction downwards, in which case that's an earlier entry. This is also something people can take into consideration. Another thing which traders can look at is potentially scaling in as well. So instead of looking at one large entry at either area, either entry point, they can look at an earlier entry with a smaller trade and then a second clearer entry with another trade. So splitting the trade between two areas. Now, if we are going to see that signal materialize, keep in mind, if we're going to see that signal materialize, then a lot of traders will, at least at first, trade back to the average price movement. This is what is known in the market as mean reversion. So just to recap, ladies and gentlemen, the ECB has cut interest rates by 1.35% already this year. The Reserve Bank of Australia has not cut interest rates. If we're looking at most time frames, we've looked so far at the 2-hour, the 5-minute, the 15-minute, and also the daily time frame, we're at a point where we're seeing a lot of resistance with the euro against the Australian dollar. And there's also the political crisis in the Eurozone as well. So there's scenarios and elements within the market that we need to keep an eye on and evaluate to see if we're going to get these signals triggered and it's going to cause that domino effect. If that is the case, then we can potentially look at this setup. So that's it for today's live trading session. Always remember to do your own research, and these sessions are for educational purposes only. As always, trade safe, trade responsibly, enjoy the rest of your day, and feel free to also visit our website as well. Don't forget that we offer swap-free trading, and we also have a zero spread account as well, which we offer, of course, for free. So that's it for today. We'll see you on our next live trading session. In the meantime, goodbye.